Ladies and gentlemen, I welcome you all to the Q1FY25 post-earnings conference call of Kilburn Engineering Limited. Today on the call from the management we have with us Mr. Ranjit Lala, Managing Director, Mr. Sachin Vijayakar, Chief Financial Officer, Mr. Vijay Shankar Karta, MD, ME Energy Private Limited, and Mr. Amritanshu Khaitan, Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties, and also a reminder that this call is being recorded. I would now request the management to detail us about the business and performance highlights for the quarter that went by, their plans and visions for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Thank you, Vinay. Good afternoon, everybody. On behalf of Kilburn Engineering Limited, I welcome you all to Q1 earnings call. At the outset, we are pleased to inform you that the company has started the financial year on a strong operational note. For the benefit of those who are attending the call for the first time, let me provide a short brief on our company. Kilburn has been in the business for 4 decades with deep focus on engineering and manufacturing of customized process equipment, industrial drying solutions and packages like rotary dryers, calciners, paddle dryers, fluid bed dryers, amongst other industrial drying processes. Our flagship products include tea dryers and weathering systems. Our subsidiary ME Energy, based at Pune, specializes in heat recovery and heat reutilization systems designed to deliver energy saving and energy efficiency solutions. ME Energy portfolio consists of waste heat recovery units, thermal oil systems, heat exchangers, and thermal engineering solutions. As a group, we cater to a spectrum of customers across several industries like soda ash, carbon black, specialty chemicals, oil and gas, cement, thermal power plants, food and beverages, metals recovery, waste to energy, and automobile industries. Since the product portfolio of both the companies are well augmented, together we leverage ourselves very well across most of the customers. As a part of our growth strategy, we have recently executed a term sheet for the acquisition of an existing factory in MIDC, Ambernath. This additional manufacturing footprint is strategically entailed into our existing strong order book and visible pipeline and inquiries. The proximity of this unit to our existing facility also allows us to synergize our existing resources. The proposed acquisition is spread over 5,000 square meters with 2 bays for heavy fabrication and necessary material handling equipment. Let me now apprise you on the results and the outlook in the coming quarters. Kilburn Energy Limited results on standalone basis are as follows. Revenue from operations stood at 63.81 crores for Q1 and EBITDA of 25.8% and PAT of 16.78%. At a consolidated level, the revenues were 85.48 crores with EBITDA of 21.59 and PAT of 13.55%. I would also like to mention here that 2 of our orders have been deferred by customers to end of Q2 and early Q3, which is in the range of 40 crores. This too impacted our revenues in Q1. Based on our order book backlog as on 30th June at group level, which stands at 370 crores, we are well diversified and robust on the same front. In addition, our current inquiry pipeline at group level is in the range of 2,000 crores plus. Based on the current order book and visible inquiries, our revenues in coming quarters are expected to only grow. At group level, we continue to target an order intake of 500 crores for the year. We also continue to target a consolidated revenue of 500 crores in the current financial year at the group level. On the profitability front, which is 20% plus, we expect to sustain the same in the coming quarters. Finally, I would like to mention that we continue to scout for newer technologies and tie-ups to increase our basket of solutions which harmonize with the existing business. With this, I would now like to hand it over to Vinay.
Thank you, Mr. Lala. We'll now open the floor for Q&A. All those who wish to ask a question, use the option of raise hand. Anybody who has a problem with raise hand can drop us a message on chat and we'll invite you to ask the question. We'll go first with Mr. Garvit Goel. Garvit, you can go ahead, please.
Hello, am I audible?
Yes.
Good afternoon, sir. Congrats for a good set of numbers.
Thank
In PPT, you mentioned about the capex for the plant is progressing well. So can you tell us the amount of capex being incurred and what is the peak revenue we can make on that facility, sir?
Sachin, can you take that one? Where do we stand on the capex front?
So Kartha is there. Capex, we are gradually started. Initially, we will be incurring around 3 to 4 crores of capex for, and then gradually it will increase to around 10 crores over a period. This includes the foundation as well as new machinery and building of the shed.
So it is going to be completed by October 24. So this is the 10 crore amount that is going to be completed by October 24. Is that right?
Mr. Goel, this 10 crores amount would be completed by December.
Okay, by December, right? And what will be the asset turns?
Sachin.
Pardon?
Asset turns, sir. Asset turnover.
Turnover, as we also projected for this year, at least we are projected a turnover of 500 crores together. So around 400 for Kilburn and around 100 for.
No, I was asking for the asset turns on the new facility that is coming in, the new capex that you are incurring.
So asset turn will be as of it will help us in generating further revenues also, no? So present year, as I told you,
Sachin, I think he's asking about the new facility that we bought. How much revenue we'll be able to generate from there?
Okay, then let me take that one. So the new facility which we have proposed.
Okay, new facility you're saying. Sorry, I thought this.
So the capex is in the range of 22 crores, and we expect a revenue of 100 crores.
Understood, sir. Secondly, on the order book part, so we are currently having 370 CR, right?
Right.
So looking at the Q1, we did approximately 90 CR. So even if we execute this 370 CR order book in this year, and you are saying for rest of the year we will get 500 CR revenue. So what is the visibility for next 2 to 3 years, sir?
Well, let me put it this way. The visibility of inquiry pipeline currently is 2,000 crores. Okay. Now we are already having 370 plus crores as order book, and we expect to have the order intake of 500 crores in this year. If this is the way it continues, we would expect that this would be sustainable over next 2 to 3 years.
Got it, sir. That's it from my side, sir. I'll join the queue. Thank you.
Yeah, we'll take the next question from Varun Agarwal. Varun, you can go ahead, please.
Thanks for the opportunity. Congratulations for the good order wins this quarter. So, for this new facility which we are creating, we just spoke about 100 crore revenue potential from that. So, when we get this plant ready to be eligible for 100 crore revenue, is that the maximum space available there, or this is the initial capex we are talking about?
Well, you mean revenue, 100 crores.
Yeah, is that the maximum capacity in terms of space available there, or can it be further extended for next year?
Well, I would say that this plant can generate 100 crores revenue. Typically, when a plant generates 100 crores revenue, there are always some ancillaries, some bought outs which go along with the equipment, which
Right.
are really sourced from other vendors. So there's a potential for higher revenue. I would put it that way.
Yeah, in terms of space, will that become fully occupied when we?
Yes, it would be fully occupied.
Okay, so we have to look for additional space for FY26 then, after
We'll
that.
come to that at the right time.
Okay. And another question was for Amritanshu ji. From a longer term perspective, let's say 5 years down the line, not in terms of numbers, but just in terms of business, how do we see the company? Would we diversify into newer products, or what is our vision? I'm not talking about the numbers, just from a business perspective.
You would want me to answer that, or you want to?
Anybody.
So let me take that question. So as I've already mentioned, we have always been looking out for newer tie-ups, newer technologies.
Yeah,
And I think, Varun, you have been tracking Kilburn for quite some time now. And you can see that, every quarter or alternate quarter, we have something to, share. Like
right.
first, ME Energy, then we have been talking about his new footprint, manufacturing footprint. And
Yes,
definitely we are looking at tie-ups. We are in discussions, multiple discussions, but
yeah.
this is something which we will disclose at the right time. Yeah. Now,
Sure.
how much it generates into revenue or turnovers in times to come, that we will also explore once we have got into tie-ups.
Okay. Any specific industries which we are interested in?
Yeah, so I would say that we would like to stick to the industries which augment well with our current portfolio, like both from the ME perspective and Kilburn perspective. So something that fits in well into both our portfolios, we will go ahead with that because that offers us a good leverage over our customers.
Understood. Okay. Thank you so much and all the best.
Thank you, Varun.
Thanks, Varun. We'll take the next question from Pradeep Rawat. Pradeep, you can go ahead, please.
Yeah, good afternoon and thank you for the opportunity. So I have a couple of questions. We have an inquiry pipeline of 2000 crore plus. So my question is, how has this been? The pipeline has been 2 years ago.
Well, 2 years ago, I would say we were looking at a pipeline of 600 to 1,000 crores. That's how we were looking at, and then it has gradually grown. And then last year we spoke about 1,500 crores, and then now it stands at 2,000 crores. So this is something which we are continuously expanding and exploring how to increase our business.
And how long does an inquiry materialize into an order? So how long time it takes?
Right. So it would depend on the type of equipment that we are offering to the customer. If it is an equipment like tea dryers and weathering systems, the total gestation of turning inquiry to an order could be up to 2 months. If it is ME energy, it could be anything between 4 to 8 months, sometimes maybe 4 to 6 months. And the larger equipment that Kilburn is into, it can be anything between 4 months to even 1 year.
And what is the conversion possibility? Like in percentage terms, what is the probability of converting an inquiry into an order? So
Right.
any rough idea?
Yeah, sure. So I'll answer this in two parts. Okay. One part I would say is that we very closely work with our customers from the time of the inception of their ideas. So let's say if a company is setting up a carbon black plant, so we work with them from the level of drawing board, and this would take typically a year's time, and we do it because we are quite sure of bagging those orders. So whilst the gestation period may be little on the higher side, but we are very confident and probability could be more than 90% that we get such orders. At the same time, we are also scouting for new customers from time to time. And there, you can say that if our offering is very well, in line with their requirements, the probability is high. Otherwise, it can be lower. And there are times when we have also lost some orders for, not being able to meet all the specifications or their price points. So there are multiple reasons. So it's very difficult to, give a single probability number to the whole business. But the idea is to work closely with the customers where we stand a good chance and keep exploring newer customers.
Yeah, sure, understood. And my other question is regarding our exports. So how much revenue do we get from exports?
It has been increasing. The exact number, may I request Sachin, if you can throw light on the number exports?
Last year we got around 36 crores of export, around 36 to 40 crores of export from our total revenue. And presently also in our closing orders, around 58 crores of orders are related to export.
Okay, thank you very much. I'll join back the queue.
Thank you.
Thank you, Pradeep. We take the next question from Sagar Shah. Sagar, you can go ahead, please.
Yeah, thank you, sir, for the opportunity. First of all, hope all is fine in the entire Kilburn team, actually. Now, my first question was related to our standalone business, actually. On the standalone business, we registered we degrew by almost 4%, and you said on the press release that it was primarily related to the order. Actually, one of the clients, actually, order got you can say accumulated in the next quarters.
Right.
So that is the reason the order got delayed. So basically, is there any other reason? Is there any other reason related to execution of the current orders? Actually, that why didn't we grow on the standalone front? That was my first question. And obviously, your outlook also. Your closing order book has been very strong in this quarter, almost 160 crore of inflow in this quarter, almost since it has been highest since many quarters. But first of all, the outlook also, and secondly, is there any other reason that what went wrong in the standalone business?
Right. So as I mentioned, there were two orders which were kind of deferred. Typically, if you look at the business cycle, quarter one is always, a little lean period for most of the companies. So,
Correct.
so from that perspective, it was lean for us as well. But we would have still crossed the numbers vis-a-vis the Q1 of last year, but for these two orders. Okay. So it's not that these orders will not be executed. It's just that the delivery has been deferred, and we expect them in the next two quarters to be completed. So we might see a spike also in the coming quarter. So I think that should answer that part of your question. Okay. On the
Okay.
outlook front, our order book is very good. Our inquiry pipeline is very good. So from that perspective, we don't see a challenge. However, execution front, if there would have been any bottlenecks, it would be now taken care of by the acquisition of the new unit, which should be up and running in 2 to 3 months' time.
Okay. So the new unit, as far as my understanding goes, so currently at this existing plant, as you said, we rely on the new plant, which will come into operation around in the next 2 to 3 months. So currently, are we running at almost optimum 100% utilization for our existing plant? So
No,
we can't something like do more production here. Is it like that way?
no, it's not like that. Okay. As I've always said in the past also, with the current unit itself, we can easily achieve 500 crores, 450 to 500 crores. But this new plant will definitely, enhance the revenues in the coming quarters. It'll make it much easier for the whole thing.
Okay. Okay. Sure. So I got your point. So basically, we can expect a sequential recovery in the next 2 to 3 quarters as compared to this quarter, right? On the consolidated.
Definitely.
Okay, sure. So now second on the is on the margins front. On the margins, the gross margins were quite healthy at around almost 43%. So first of all, are these sustainable, and that led to the EBITDA margin almost on the standalone front, we are at almost 26% EBITDA. So this is again a record high EBITDA actually, which we are clocking. So first of all, are these sustainable? We are at 47% gross margin and 26% EBITDA, or is there a one-off in these numbers?
So as I mentioned on the profitability front, which is in the range of 20% plus, we will sustain this in the coming quarters. As the economies of scale go up, definitely this is sustainable, and we are very much on track.
Okay, okay, sure, sir. Now my next question was related to obviously by our closing order book we can clearly define that the currently the kind of orders that you're getting from, especially from your carbon black clients, your closing order book also consists of soda ash and even the petrochemical industry. But how has been the clients' mood actually? Are they are the clients still wearing of the geopolitical tensions outside, or the India story still looks quite intact as far as capex is concerned actually?
Well, if you look at the order intake, that itself speaks volumes because the order intake in Q1 has been good. Uh, well, when a quarter back we were saying, is elections impacting the business? Well, answer was not really. There were geopolitical tensions at that point of time also, but things have gone on well. As of now, it's on, but I think overall India story is well on track.
Okay. Okay, sure. So, my next question was related to actually you right now highlighted that 100 crore is the kind of a target from the 22 crore factory that we have recently bought at Ambernath. So
Right.
that relates to asset turnover of almost 5x. Now, basically coming on to your ME Energy, obviously this has been a lean quarter and has on always been actually traditionally also. So for ME Energy, you are incurring a capex of around 20 crores. So excluding the Ambernath plant, if we include this existing Kalyan plant as well as the Pune plant, can we do a consolidated turnover of, if including both, around the 600 to 650 crore alone by these two factories?
By these two factories.
Yeah,
Well, I can first let me speak about Kilburn. I think in Kilburn we can definitely, touch 400 crores on a standalone basis, and the target is that Pune we should be able to even cross 100, 120, maybe 150 as well. So even even arithmetically, if you go, so it should be in the range of 550. Yeah, but if you're trying to then say that, okay, then are we going to reach 650 with the third factory? I would say as of now, no. Everything takes time to streamline. It takes time to streamline. Yeah. ME Energy also, we have just started expanding the base. So, that would take, let's say, 6 months to stabilize. Similarly, Ambernath factory would take 3 months to, kind of acquire, and then another couple of months till we, stabilize all the operations. So if you're talking about the current year, I would still stick to 500 crores, and maybe next year definitely we are looking at higher numbers, and that is something which we will apprise you from time to time.
okay. So why I was asking actually that because of the capex that you're doing
If
in
I can,
ME
if I
Energy.
can just intervene here,
Sure.
I think what you're trying to understand is the theoretical capacity of the three plants now put together. See, the capex which is being done is the 22 crore is for the Ambernath project. In ME Energy, the management is planning to spend about 5 to 10 crores over next 12 months. That will augment the capacity of ME Energy to easily scale up to about 200 crores, provided we get the right mix of orders. And the Kilburn plant in Saravali can do between 400 to 500 crores. Again, it depends on the order mix. Because here in Kilburn, you're getting orders which are solution providers. Now, there could be sometimes you get an order which is only a dryer. There can be times when it is dryer plus a lot of bought outs and other accessories. So
Correct.
the same plant can actually generate a much higher turnover for the company depending on the type of order we get. But now with the Ambernath acquisition, ME Energy, and whatever capex which has been planned in Kilburn, the company with the right product mix can scale up to 700 to 750 crores of revenue with the kind of capacity we have. But the caveat in this is it depends on the order mix we get.
Right, sir. It obviously will depend on the kind of requirement from the customers actually.
Correct.
Like what kind of customer requirement is there, and dependingly, accordingly, your margins will vary, and obviously your turnover will vary actually in the future. I was just trying to understand basically at least a ballpark number, if there is any scarcity, if there isn't any scarcity for space actually in the next 3 years, and
No,
of
with the Ambernath acquisition, I think we are going to be in a fairly comfortable position. Just
right,
to give an idea, the Ambernath acquisition can push out 10 to 12 rotary dryers per year, which is about 100, 120 crores. And in the last 4 months, the company has bagged 12 rotary dryers. So that allows a lot more flexibility at the Kilburn plant, because in the Kilburn plant, we are now also looking at focusing on titanium manufacturing of titanium equipments, which is used in defense, and some select customers who want their dryers made with titanium. So those are going to be more value added steps which the management has taken. So that will help offload a lot of the standard rotary dryers into the Ambernath facility, the new one, and a lot of specific value added work can continue in the current facility.
Right, right. So my last question was related to the debt levels. In this, as we have acquired a 22 crore plant, in the next 6 months, we are going to infuse another 10 crores in the new ME plant actually for expansion. So going ahead, are we can we something like right now? You can suggest what are the debt levels right now, and by the end of this year, what are the debt levels that you are actually targeting?
Sachin can highlight the numbers, but a quick answer to you is that all this is being funded through internal accruals.
Okay, okay, sure, sir. That's great. Okay, sure, sir. That's it from my side. Thank you, and all the best for
Sagar. We take the next question from Arka Bhattacharjee. Arka, you can go ahead, please.
Yes, thank you, sir. Am I audible?
Yes, yes.
Okay. Congratulations, sir, for the good set of numbers that we have got this time. I just wanted to know, I have a few questions on this regarding the integration with ME Energy that has been done. What is the overall impact in the operations and the technology front post this integration with Kilburn Engineering?
On the technology front, I think I had mentioned that
Yes.
their heat recovery systems are kind of complementary to our business, so that enables us to cater to our clients as well, and through them we also have an access to their clients. So from that perspective, it's a synergy. In terms of technology, I think heat recovery technology has been with ME Energy for a long time, and we are seeing from time to time we can offer newer solutions with them also, through them also. And if you want more, probably Mr. Karta can throw some light. Vijay, would you like to say something on this?
Yes, I would like to add. So, coming together with Kilburn has added strengths to ME Energy as well as Kilburn. So, a lot of the customer base expanded. We had around 30-40% common customers, but the other 30-40 balance 60% customer on each side has been has been added to the total customer list. This is the one of the major thing. Second is we have been able to reach out to customers at board level and things like this in the recent months after joining with Kilburn. For example, as soon as we started working together, we finalized one order from a cement manufacturing facility, which otherwise would not have come to us. This has come because of the association. Same way, on carbon black, we had been doing some work, but then our expected work, the basket for carbon black at ME Energy has expanded after we have joined with with Kilburn. So it is too early to make a list out, but then in the short period of last 5-6 months, I think things are looking bright, and ME Energy is going to grow in large in bounds and leaps in the next 1.5 years, 2 years, and going ahead further. This is all I can say.
Thank you, sir, for the very detailed explanation. And regarding the part which is about the significant orders that has been recently added, what is the expected impact on the revenue front?
At the group level, At the group
Yes.
level, as I mentioned, that we still continue to target 500 crores plus for the current financial year.
Okay. And regarding the current order book, which is how does it stand as compared to the previous years?
I think in the last quarter it was 280 odd crores, if I remember correctly. The open order book, which has
It was
gone
227 crores and 280 crores jointly.
jointly 280 crores it was, and now it's 370. So quarter on quarter, you have seen a rise in the open order book.
Okay. And in the pipeline that we have for the future orders, any major projects
Yeah, so we have inquiries.
that our company is bidding on?
Yeah. So we have inquiries over 2,000 crores, and we are also selective on what we have to bid. So our focus is always on projects which will give us higher revenues and preferably higher bottom lines as well. So accordingly, we bid. So we are focusing on these 2,000 crores as a group.
Okay.
I
Okay,
cannot.
sir. Thank you. I'll join the queue then.
I would not like to mention the details, of course.
Okay.
Arka, are you done? Can we move ahead to the next participant?
Yes, I'll join the queue,
Yeah,
please.
We'll take the next question from Dinesh Kulkarni. Dinesh, you can go ahead, please.
Hello, sir. Can you hear me?
Yes.
Yeah. First of all, congratulations on a good set of numbers on the profitability front. And my apologies because I joined a few minutes late. So I may have missed out on the first, initial few minutes of. My request to you, sir, can you just give me what was the consolidated, assuming, we had this transactions last year. What was the Q1 FY24 consolidated numbers? Is it possible for you to give that number?
Q1/24, there was no consolidation. The ME Energy is a recent acquisition, but I can tell you what was the revenue. It was around. Sachin, you have the numbers with you?
You want for this quarter, no, Mr.
No,
Kulkarni?
I'm saying no for the last quarter. Say, assuming if we had the same the acquisitions last year, what would have been our consolidated revenue? Because see, on the press release, on the page 2, we have given the standalone
ME
results.
Energy got consolidated only after 20th of February. But just to give an idea, the first half last year first half, they virtually had negligible revenue, maybe only 4-5 crores.
Okay, so
a lot of their revenue came in the third and fourth quarter.
Okay. So do we expect the same kind of a growth? So you're saying the first half was negligible for ME Energy.
So ME Energy last year did in our books only about 30 crores of revenue came last year. This year we should be looking at 100 crores plus.
100 crores plus. Okay, awesome. And do we expect the margins on ME Energy to expand? In the next.
We are guiding for a consolidated margin of the company at over 20%.
Or 20%, but we have achieved almost close to 25% on a
that was
basis.
Only standalone, but if you see consolidated, our margin was 21.5. So we believe we should be over 20 to 21% for the consolidated figure for the full year.
Okay, but how about standalone Kilburn basis? How should we look at that?
That should be higher. That should be higher because ME would be a tad lower than Kilburn.
Yeah, fair, but that would be around 25%. Can we expect?
We cannot. It's not practical for us to give the full year number. But we are looking at more the yearly consolidated figure as a guidance because order mix keeps changing. So those margins might differ by 1 or 2%, whether for ME or for Kilburn.
Okay, fair enough. I got that. Thank you.
But you can assume Kilburn to be 1% or 2% higher than ME. So on a standalone basis, Kilburn would be at a higher percentage.
Okay, great. Just one more thing from my end. So we are in the process of acquiring this new plant at Ambernath, right?
Correct.
For 22 crores, right?
That's right.
So where are we in that process? Like how long still we would expect?
I mean, it's just been 15 days. The agreement has been signed.
Yeah.
So I think we should have it all concluded in the next 2 months.
Okay, by the end of next quarter, I mean this quarter.
By the end of this quarter.
Okay, great. And what kind of asset turn or revenue we're expecting for that particular plant?
It has been mentioned about 100 crores.
Okay.
So it would be about 5 times the investment.
Okay, can you just what is the current status of the plant? Like, are they generating any revenue or it is just?
It's a operational plant. They have the machinery. They have done work for Kilburn in the past as well.
Okay. And does that require any change in the plant or any capex in terms of new machineries or we can just acquire them and get them working? What is the status of that in terms of operations?
Yeah, I'll answer that.
Yeah.
So as of now, we can very well start the operations, and as we go forward, there will be some expenses because we have to put our IT systems in place, some security systems in place. So those, and of course, you have to do up the office a little bit. So there will be some expenses over there. On the capex front, as of now, we do not see an immediate expenditure. Probably once we shift into it, we will reevaluate our requirements, and accordingly, we will keep you updated.
Okay, sounds great. Yeah, just one more thing. So we have booking of almost 160 crores for this quarter. So may I know, like, what are we expecting this thing, or is it an exceptional quarter which we had, or how do we expect for the next few quarters or remainder of this financial year?
So
the order bookings?
In terms of order booking, as I mentioned, we will definitely target 500 crores plus order intake at the group level.
Okay.
Yeah. So we are not deviating from that. We have kept that number very well fixed for ourselves. Okay. And this is based on the fact that we have a visible inquiry pipeline of 2,000 crores.
Right.
And we do not see any major factors which could upset that at this point of time.
Yeah, fair enough. So say assume we already have 160 crores. So this is 160 crores plus 500, or you're saying that's 160 is already.
For the financial year, we are targeting 500.
Okay, it already includes 160 crores. That's part of it.
We do better, it's only a bonus.
Okay, great. Okay, thank you. Thanks for my questions. If there is anything, I'll come into the queue. Thank you.
Thank you.
And all the best.
Dinesh,
Yeah.
we'll take the next question from Jagdish Sharma. Jagdish, you can go ahead, please.
Hi, sir. Congratulations on good set of numbers, sir. So my first question is, when we talk about this 500 crores order book, is it from 225 or 227 on FY24 to 750, or you are saying 225 to 500? Can you clarify that? Like extra, just 500 extra will come, or what will it be?
I'm talking for the financial year, we would have an order intake of 500 crores.
Intake. Okay. So my second question is that what is the nuclear related order in that entire order book currently? What is the nuclear plant or nuclear related order in our overall order book?
Right now in the order book, there's nothing related to nuclear.
There's nothing related in the orders which have been won. But as you are aware, there are certain projects by NPCIL which are already under the process of being awarded. So Kilburn is also participating in those jobs. So I think nuclear sector per se has been slow or quiet for the last few years. But with the current government push, I think the management will expect significant orders to come through in the next 2-3 years from the nuclear space.
Okay. So my third question is, when will our company be a debt-free company, and when will our pledged share will goes down to zero?
There's no pledge at the moment. There's some a non-disposable undertaking given by one of the promoters. So there's no pledge on the holding. And regarding your debt position, we have a small term debt of about 50 crores, which is payable over a longer period of time. So we should be at a comfortable position, net debt free by end of the year, unless any other acquisition opportunity comes up or anything which comes up which is positive for the growth of the company. Otherwise, free cash flows will be used to pay down the debt.
Okay. My final question, sir, you mentioned about this new Ambernath plant, right? Do we have any free plants nearby that, like free land, so that we can increase our capacity in the coming time? And what is the total plant size, sir? Can you just tell me in numbers? Can you just quantify that?
Right. So when you talk about the Ambernath factory, it is spread over 5,000 square meters. Yeah. And
Okay.
it has two working bays for heavy fabrication, something in line with what we have at Saravali, and the relevant material handling equipment, and a office building over there of 2 floors. So which is very sufficient for the numbers that I spoke about. Is there a free land around over there? As of now, I'm unaware of it, and probably we'll find out if it is there. But as of now, I'm not aware.
Okay, sir. Thanks, sir. All the best for the coming quarters.
Thank you.
Thank you, Jatish. We'll take the follow-up question from Garvit. Garvit, you can go ahead, please.
Hello, am I audible?
Yeah.
Hello.
Yeah.
Thanks for the follow-up, sir. Ranjit sir, as we have a pipeline of 2000 CR, as you mentioned, right? And we are also indulged in new initiatives, including the recent acquisition that we did, bringing the synergy into the company. And you also mentioned about the new strategic initiatives for further product diversification. So if I put all these things together in a basket, and considering the kind of execution capabilities that you and your team is having, so can you please guide us for the revenue visibility for the next 3 years down the line?
I think this was partially answered by Mr. Ketan a while back. If everything is fine and if we have the right product mix, you can expect 750 crores. But I would say that as of now, I would like to stick to the number of 500 crores plus, because I would like to go one step at a time.
Got it, sir. Got it, sir.
We have
Thank
been
you, sir.
interacting for last many quarters, and I think step by step we have gone forward. We continue to do that.
Got it, sir. Thank you, sir. Thank you very much. All the best.
We'll take the next follow-up question from Sagar Shah. Sagar, you can go ahead.
Sure, sir. Thank you so much for the opportunity again, actually. So, my first question was related to the order inflow guidance. This quarter has been, in spite of being in a, you can say, a lean quarter, as far as our company is concerned, still we have got a record high order inflow. So, you had given the guidance of around 500 crore plus for revenue, as well as the order inflow guidance. So, you want to revise? Do you want to revise that guidance upwards, sir, by any chance?
No. The answer is no as of now. Now let me explain you. When we talk about the lean quarter, typically when I say lean quarter, it is more related to the revenue. And again, we had deferment of a couple of dispatches. That's why it's slightly impacted. On the order intake front, as I mentioned earlier, the whole negotiation processes can take from 4 to 6 months to 1 year as well. So whatever orders have come in Q1, the discussions would have started maybe 2 quarters back or 3 quarters back.
Correct.
It's also possible that some of the orders which we may have expected to close in Q4 may have got slipped to Q1. So this is typically which, this is how the business cycles work,
Exactly.
So as of now, I would not like to revise the numbers upwards, but after maybe a quarter or two, if we feel that, there is a possibility of revision, we will keep you posted.
Okay, so basically, still our 500 crore inflow for order inflow as well as revenue exists still for both of them.
Set, and we have not touched it as of now.
Okay, sure, sir. Now, my second question was related to ME Energy. ME Energy, in this quarter, we for the first time we have got a order from a cement plant for for the biomass project. And going ahead, we are expecting the same for its existing product pipeline also, for as far as ME is concerned. So you can say, expect a better performance from ME as compared to the last financial year in terms of revenue and margins? Is it possible, sir?
Well, I would request Vijay to answer in details, but at the outset, I can only say that we are expecting ME to give us a revenue of 120 crores this year. And obviously, as it scales up, we will have better margins. Vijay, would you like to add to what I've said?
Yeah. As Ranjit ji has already mentioned, Energy is targeting to do around 120 crores business this year. So the economies of scale is going to work in our favor. Definitely better margins can be expected. And we are also looking at a very strong inquiry pipeline. So that is definitely likely to give us an opportunity to further grow by a large in the coming year also. So overall, Energy will add good EBITDA levels to the numbers of Kilburn.
Okay, okay. So my just follow-up question to your answer was, Vijay sir, that apart from this, the first time that you got order from a cement from Sri Cements actually to put it in place.
Yeah.
So basically, are you expecting or have you got inquiries from another cement players also for the waste heat recovery plants? Can you throw some color on that?
In for the cement plants, our basket does not only have waste heat recovery system. There are other systems as well for cement industry.
Okay.
So the first one that we have noticed for the waste heat recovery system, but presently we have just about received an inquiry for a waste heat recovery system also. So we'll be working on both this thing and. A plan for carpet bombing cement industry is being worked out. So because cement industry as a process is more or less standard, so if you did it for one plant, it could be done for all the plants. It's only the capex cycle of the customer only is the decision aspect. So a plan is being worked out. So it is too early to comment what we are going to expect from cement industry, but we can provide multiple equipment to cement industry, and all are being looked into.
Okay, okay. Sure, sir. My last question, sir, was related to was to Lala sir actually, that the 2,000 crore inquiry pipeline that you just stated, something like such a huge inquiry pipeline still majorly exists from this soda ash, petrochemicals, and carbon black, or any other industry has also actually something like that you have got the you can say higher inquiries from, or is it just these three sectors that you're getting inquiries?
No, it's a mixed bag. Yeah, we definitely have inquiries from carbon black, soda ash, and quite a few we have already booked also in the first quarter. But we have opportunities, as we just mentioned, something in the nuclear, we have something in petrochemicals, oil and gas, something related to offshore platforms. So we have a number of inquiries. It's a mixed bag. And that is also the advantage we have, that our business is not focused on one single vertical. Since we are spread across verticals, it actually acts as a risk mitigation as well.
Yeah, absolutely. Yeah, thank you, sir. All the best.
Thank you.
We'll take the next follow-up question from Arka Bhattacharjee. Arka, you can go ahead.
Yeah, thank you for allowing me to ask a follow-up question. I just wanted to know have two more questions on this. What is the percentage in that order book which is a repeat business from your existing clients?
Sachin, do you have the numbers with you? What is the percentage of the repeat customer business
in this pending order?
Yeah, in the current order intake, current order pipeline.
Current order pipeline, it will be around 50 to 60% of repeat orders. 50% will be repeat customers.
Repeat customers and not repeat orders.
Yeah, repeat customers. Our regular customers who are.
Okay. And regarding the promoter stake, do the promoters have any plans to increase their stake going forward? Any percentage you have in mind?
Mr. Ketan, can you take that?
See, we can't comment on what is the stake increase or decrease position. As and when any changes happen, we duly inform the exchanges.
Thank you, sir. Thank you.
We'll take the next follow-up question and the final question for the day from Dinesh Kulkarni. Dinesh, you can go ahead, please.
Yeah, thank you for giving me another opportunity, sir. So my question is, like we mentioned, we have got 160 crores of new order bookings. Can you just give me the number, like how many orders were there?
Sorry, can you come again? I
So
missed.
like, okay, I said we have got 160 crore worth of orders, right, for this quarter, right? Can you able to hear me?
Yes.
I'm audible? Okay. So my question is, like, how many orders were there? The total 160 crores, right? Is it any number, like is it just one big order or there are multiple?
Around 20 orders.
Around 20 orders. And are they from the like same set of customers or different set of customers?
It's a mixed bag. You have both. You have
Okay.
set of customers as well as new.
Okay, awesome. Fine, got it. And another question is like, so we said we are adding, we have added almost 12 new engineers in ME Energy, right? For this in this quarter, maybe, or since acquisition. Like my question is, are we increasing our sales team as well? Because since we are growing, we are getting new orders. So are we increasing this market sales and marketing spend as well?
Well, at the group level, I would say that we are increasing our manpower requirement from time to time as and when required. So whether it is in marketing and sales, whether it is in getting new customers, whether it is in operations, that is a continuous process. It is the focus is not only on recruiting people with experience, but also graduate engineering trainees, so that we build a good set of cadre down below who can get developed over a period of time. So we review our needs from time to time, and at a group level, we decide what is to be done.
Okay, sir, got it. Thank you for that, and all the best.
Thank you.
Thank you, Dinesh. So since that was the last question for the day, would you like to give any closing comments?
Yeah, Vinay. So I would like to thank all of them for being here today. And once again, I would like to mention that we are well on track. We are putting in all efforts, well focused, and in the coming quarters, definitely you will see how things are moving positively. That's all I would like to say.
Sure. Thank you, sir. That brings us to the end of today's conference call. Thank you to all the participants for joining in, and thank you to the management team for giving us their time.
Thank you.
Sir.
Thank you. Thank you.
Thank you, everybody.
Thank you very much. Thank you.